Hey guys, Sunday, November 17th of 2024. This is part 2 of the weekly forecast. So without any further delay, let's get into it. So we're going to start out with, let's see, what will be easier? Okay, maybe we can start with our quants, just to kind of get an idea. Before that, let's just look at our monthly bar. So far, our monthly bar is still positive unless we take out 265, and you could probably say maybe have a close below. You could say probably a close below 270 and 265, and then things gonna start looking bearish. But with the monthly bars, so far, little retracement, could potentially retest and maybe push higher, and then eventually turn over. However, looking at our weekly bar, you can see that it's we haven't taken out this low yet, 266. So it's negative right now. So keep that in mind. Now that we got that out of the way, let's go into our quant, what it was indicating for us here. I'm putting all this here. Okay, so maybe I should open it up a little bit so we can kind of see it better. There we go. Maybe one close. There we go. Right there's perfect. So this green line was indicating upside. This one is indicating upside. And possible turning points will be the 29th. Does the 29th ring a bell? On my last video, like that last week. So if we were to go up, this is your last leg or opportunity for a upward impulse wave, and then possibly turn from here. We had one here, and we had here a turning point going down from here. So here was indicating that if this didn't play out, chances are from here, we just continue making lower highs and lower lows. To, you could say 1222. So this is still in play, but it's starting from here. So it looks like this didn't play out because we got this pop, we pulled back, and it looks like maybe it may want to go and do a last one. I'm guessing maybe get liquidity up here, but not going to hold my breath to it, or you know what I'm saying. May not get up there. But if it does, it's probably going to get some liquidity up here and then turn. So we could potentially continue maybe bouncing. That all depends on price action this week. So we see that we don't take out this low that we made, what, a 268 around there. These are closes. So wherever that low was on Friday, if we don't take that out, chances are we're probably going to grind higher. Maybe test it one more time, maybe, blow right through it. I'm not too sure. But it's indicating that this is probably going to be the last time, and then eventually maybe turn from here if it's going to follow this, I guess, prediction, if you want to call it. And the model says from here, pretty much the last week, then things start going down. So now let's take these off to clean up the chart. Now that we know what the quant was indicating, let's look at my solar cycle, my annual solar cycle, and we're at that sweet spot that if this was to play out, this was just a false break to the downside, and we're going to get an explosion, or just maybe a move high. We don't know how high is it going to go, but that it's going to trend higher. And somewhere around the 17th, it starts failing. We don't know if this is going to play out, but this is the solar cycle, which is the annual cycle. So it all depends if we don't take out that low. If we don't take out that low next week, and next week we find ourselves higher than 302, there's a high probability that we're probably could probably follow this this projection line. Now, the one I'm kind of leaning on is this red one, but it just kind of gets toppy here. So it could kind of go, you know, with the solar. It's just that the solar just gets more accurate. It's indicating a possible 1217, and then it kind of goes down. But it's somewhere in that ballpark, you know, in the last week, maybe be pushing into December. I'm not too sure. But then, you know, it pulls back in. Then eventually you can see that the solar cycle finds a low in February. So January, December, February, this is all the weakness of natural gas. So I wouldn't fall too much in love with the downside right now unless we take out that low. But B, don't get too crazy and fall too much in love with the upside, because this is where the traps are being laid. Traps are being laid for the bulls, and traps are being laid for the bears. And it all depends who the Black Widow is going to get in between this range. Now, what would void all of this is that nat gas is not going to go down, and she continues grinding higher all the way to $4 from here. Then things changed. So keep that in mind also. We're kind of, you know, looking at it at maybe this is what's going to happen, but what would void this whole forecast is that she continue grinding higher into December, into January, into February. And when we look back, well, it's like, wow, she's at $4. What the hell happened to the seasonality? That is also possible. So keep also that in mind. Let's look at now some other things that I watch. Let's put our annual here. You can see the same thing. Peaks around the first, you can say the first week of December. Our first annual, this is just using 3 years worth of data, and you can see that it gets weak already from here. And she gets down all the way to February. So, and so far she popped. So I don't know if this is a bull trap, but normally from 3 years worth of data, she gets weak somewhere around the first week of November. Using 6 years worth of data, she gets weak somewhere around this ballpark. So she could have a fail new high and then just turn over, take out that low, and then continue. So if you're bearish, this is what you want to happen. Follow this, you know, eventually get a bounce to January and then end up in February. But do you see the theme? You see the theme is that somewhere between January and February, she kind of bottoms out. They all indicate using 3 years worth of data, also 6 years worth of data, somewhere around here is weakness. But, you know, in my mind, if this plays out, this is the great opportunity because we get to load up for a possible bull run into 2025. And that's just me speculating. So the lower she gets down here into February, that's where I'm going to start accumulating if this price action is, you know, followed by her. Which would be a great opportunity, especially if she fills gap fill and all that. That's around $1.90 around there. That would be a great opportunity to load up, you know, start, you know, storing on some whatever ETS, whatever you want to trade related to gas. Annual and decimal, it gets choppy here. It pulls back, goes up, December first week. Pull back. This one is kind of odd. This one rallies into December. Actually into, you know, January the 13th. So this one just gets really choppy. This is using the decimal and the annual together. And I also want to include 10 years worth of data. This is what Gann would recommend his students to look at 10 years in the past to see if there's any averages. Price action that could maybe relate or kind of rhyme. In other words, you want to kind of look at patterns, and you can see that it kind of, you can see it follow here, peaked here, somewhere around here, we kind of bottomed out. You can see that we did it earlier here, got choppy. We popped all the way here. Here it's kind of popping all the way to you can see the 19th. So there's something here interesting. And you remember my video that I did on Saturday. Remember the 21st all the way to, was it the 29th? The 26th? Maybe the 21st to the 26th, around here. This is where you want to be careful within the 5, the 10 and the 15-year average. This is where it gets toppy. Looking at 10 years ago, she topped out on the 19th. So this could be, this could probably also play out. And then you get this sharp pullback. And look what she did. This is probably getting gap fill, chopping around. And then look what she did on February, on the 6th. She bottomed out. And I don't know if she probably continued going lower, but this is what it's showing here. Gann also said to look at 20 years. Let's see. Let's see. 20 years ago. Wow, look at that. 20 years ago. Somewhere around, let's see what, the 17th. And then you get this big, let's see, you get this big spike down. 22nd. This one is opposite, and then it rallies into the 23rd. Pulls back, first week of January, build new low into the 23rd, and then starts trending higher. I would probably maybe lean more on the 10-year, but this was interesting, this price action 20 years ago. So I think to sum it all up, well, not sum it up, I want to go to the more my simple glance chart and everything else just to kind of see what's going on there. But what we're getting is that we could get a bounce. We just have to be careful and not fall in love with it, because just in case the seasonality will kick in, it's going to bring us down, and it'll be a great buying opportunity once she bottoms out and bases out, if she's going to play this seasonality price action here. So we'll see how that's going to play out, but I just wanted to show you the probabilities of a possible bounce here. That's why I was kind of hesitant to go short if it bounced, but just kind of looking at it now of all the stuff that I've shown, I'm kind of like, okay, if we could take out that high, chances are it's going to be a dead cat bounce, and then maybe grab all these liquidity up here and then come down and then get all the bears. I mean, not get all the bears, get all the bulls and push it down, but get some of the bears up here also. So like boom, head fake, and then get them down. Or not even get the liquidity up here, just kind of head fake and then maybe go down. The key is this low and this high within November. What's going to happen? Are we taking that out, or we're taking that out? And then once those two things happen, if we take that out, it's obviously going to go down. If we take this out, is it a head fake or a continuation higher? And that's where you got to pretty much watch out. All right, let's go to the last clip and then we'll end it there. Okay, so this is the last chart. Let's look at our market profile. Let's see what the line in the sand is. So right here, these red lines, that's your 278 and your 289. That's your point of control, and we're kind of hovering around there. We close around 283. So that's going to be interesting. 289. to you can say 278. That's your point of control on the monthly. I'm going to skip the weekly because there's really nothing there. But looking at the daily, using 1 year, we bounced off the value area high of like 269, 268. And we are above point of control, which is 276. So we're having a tough time at the value area high of 295. Pretty much this area right here. So if we bounce this week, test this, and push higher, get ready for the bull trap, because they probably could play that out. Like I said, keep an eye on this pivot high and this high right here of 339, 340. You can see the volume was pretty good there. The bulls showed up. Let's look at our trend line to see if there's anything here real quick. Trend line. Yep, we bounced off that trend line too. So you got a double whammy. So this is a good area to go long. You got value area high and your trend line. And we got this pop. Now we got to look at this trend line. If we could get above that red line that has been, you can see that it respected it here. Kind of chopped out here and here. But if we could get above there, then value area high of 296, 302, and then this pivot, and then that pivot. And then watch out for the seasonality where they could trap the bulls. So far, MACD is negative, bounced off the 20 and the midpoint of the linear regression channel. However, we do have a PPS sell signal, but the trend is still up. We're still in chop mode. We didn't get to close below 271, so that's good. And on top of that, we are above the cloud and above the moving averages, which is the 20, the 50, the 100, and the 200. So we got to see what the Black Widow wants to do. She wants to go up there and retest and push higher. There's evidence to back that up with the data that she could possibly do that. So we'll see. Nothing's really changed on the weekly. We still got a PPS buy signal on the weekly and on the monthly. The only thing we have right now is on the daily, and that is subject to change this week depending on price action. Let's go to our geometry real quick. The APF held. We didn't even get to get down here, which is good. We would have hit this and like cracked, then I would have been like, uh-oh, but we didn't get that far, so that's good. So we got this nice bull, you could probably, not a bull kicker, but you know, bottom feeders showed up. And we closed above, we closed above this angle right here. So that's a sign of strength. Probably one more I'm going to share is the FT levels. So far, we've penetrated back in again, so that's good. We kissed right here at 284. I would like to see it close above 286. Give me a potential to at least test this level up again. And let's go lastly to our midpoint chart. Using at our yearly, we got still a buy signal on the monthly. Watch out for 286. That's right there. Mobos and everything looks good. We go into our monthly pivot. You can see that we're above the 75%, which is 281. Possible target if it's going to grind higher. 291. That's for next week. And we're in the mobos, so it's still good. It's choppy. It could go either way, but so far, Stokes are holding. Looks like a nice little snapback. And that's what it looked like. And it's above the moving average. So that's good. On the monthly pivots, on the weekly pivots, you can see that it sold off really hard and didn't take out the midpoint on the weekly, which is 266. So that's good. PPS buy signal on the 4-hour. And we're in chop mode right here. Even though this is positive and we got a white candle, we need to have a close, you can say, above 287 for things to get positive. Your midpoint for the whole week of next week is going to be 285, which is this one right here. If we cannot stay above 285 for the whole week, Or at least, you know, this is the week. Was going to be interesting. If we can't stay above 285, it's going to get ugly. This is the last opportunity for us to try to squeeze out something to the upside. You see the Stokes are now getting pressure to the upside. You got a moving average here, so be careful. Watch out for 289. And also the 75%, which is 293. But this is your main important line for the whole week. If we could get up there and hold it, chances are we might test again 302. Lastly, the 1 hour. So for Sunday's night open session into Monday, your line in the sand is 276. So we got all this price action to go up here. And in the overnight, you know, the bears are probably going to come and try to push it lower. We need to hold 276. So this could probably be a good area where it might hit, it might just go quiet. And then on the US session, maybe start grind higher if that's going to play out, or maybe just continue going higher. Targets to the upside for Monday only will be 292 all the way to 288, even in the US session. Worst case scenario, if it's going to be a head fake here and they're going to slam it, take out your midpoint of 276, take out the low of Friday, which is 268 for, I guess, scalping. Targets to the downside would be 264 all the way down to 261. So it's going to be one of those things where this is it, and it's just going to be stair-stepping down. So you got to be careful. But if it's going to pop, we need to hold this level and trend higher, at least to test 302 again, and maybe push higher. And also knowing, keeping in mind that large speculators are short. The daily cycle is down on the spectrum cycle, and according to the LA wave theory of my chart, we are somewhere already on the wave 5 right here. So be careful maybe for an ABC, because that also could happen using those theories. I think that's it for me. I'm going to sign out. Hope you like this video, and I'll keep you posted on my thoughts on that gas.